Folks to get in here. Hey Ron, hey Cav, good to see you. Hey Better Dad, nice to have you back in this room. I like that green check next to your name. Congratulations, welcome to the family. Good morning, Jerry. Great to see you. Great to see you. I'm excited. Um, I love it when you guys commit because it means that I'm gonna see a lot of you and I'm gonna see a lot of pictures. Um, the folks willing to work tend to get to where they want to be. It's pretty cool. Guys, I put something in the room. I like repetition. Everything I do is the same thing all the time. You guys know that. I don't think I see any new names in here right now. There's a reason that I do it though, guys. Repetition. It builds confidence. You get those skills, confidence to perform tasks. I like that. Strengthens connections. Repetition helps create and strengthen connections in the brain. It improves retention. Repeated exposure to information helps it stick long term. Good morning, Jen. Or good afternoon, Jen. Good morning, Wayne. Guys, repetition is awesome. Repetition is, man, that's where you get there. So the green check, Bob B, means that you purchase software, that you're an owner. Well, you're gonna get yours. You're gonna get yours. That's okay. You're still in the family as a renter. You're like my Bob-in-law. I'm just glad to have you guys here. It's good stuff. I got one of the coolest emails yesterday just from an old long-term client who stumbled into the room, and it was pretty cool. He really liked the education, so it was nice because he remembers the days when my brothers taught, and it was a little different. Guys, let's check news. There wasn't anything early, but at 10 a.m., hey, good morning, Miss Trina. At 10 a.m., there's going to be the JOLTS job openings. That's a high impact. And the cool thing is you don't have to know what a JOLTS job opening is. I thought they quit making that cola. Apparently, they're still doing it. But what you do need to know is that whenever there's that high impact news, the market could spike. It could run. It could fly the other direction. It can change direction 1,000 times, or just be too fast to trade. So every morning I come to forexfactory.com/calendar. I'll give you guys the link. And if I see a red box, I choose not to trade. That's the long and short of it for me. I don't have to look at anything right of this box. It just doesn't matter to me. But if you are one of those, hey, I wonder what it means kind of people, you can click on the little thing and take care of it. Guys, are you hearing music? Mine's muted on my end. All right. Let's give Cav a little something something. There we go. No music. We're good. Little elevator music. Get your day going, right? So Forex Factory is always my first stop. I swing there when my charts are loading. Well, I hit open workspace, but crazy fast computer, I don't really get over there before. Everything that I talk about, all the repetition that I'm going through, guys, it comes from the Nexgen web page. All the rules. Hey, what's going on, Rob? I had 10 a.m. Jolt. Did you have something different than me? I had mine at 10 a.m. Let me check my filter. Am I Eastern time frame? Got me nervous now. Yours says 9 a.m. Are you Central or are you Eastern? Oh, that was last week. I am set to Eastern Standard Time. So at 10 a.m. Eastern, yours says 7 Pacific. Yeah, so that makes sense better, Dad. 7 Pacific makes sense. Oh, you're west coasting it, huh? Man. When my wife and I traveled better, Dad, we did spent 6 months in Oregon and 6 months in Washington. And it was an early morning. I liked it. We didn't do Oregon was Pacific Northwest for us. We did Tri-Cities area in Washington though, a lot closer to the Idaho border. That was awesome. I really liked it up there. I'd move up there if my kids would move up there. Okay. No, right. You were just north of us. It's pretty up there. So, Rob, when you look at yours, go up to your clock and hover over it and see if it says that it is Eastern or Central. Mine is set to Eastern. But if you're in Central, you can have it Central, but mine's Eastern. I give you guys the illusion that I'm in the Eastern time zone, but I'm really not. I'm in Austin, Texas, so I'm Central. But anyway, I digress. Set your filters, make it match your clock. Whatever you have to do to make sure you don't step in front of that train of emotion. Fibonacci day trading, guys, this is the website. And there's the software guide. For you newer users, the software guide's kind of your Ninja Trader how-to. Scaling charts, adding stops and targets, changing the look of things, market replay, all that stuff. Deleting old charts, building new workspaces, all that stuff is for you here. I always encourage you guys, reach out in the classroom if you need help. I'll do everything I can, everything I'm capable of. But if it's the weekend and something looks a little sideways, you can always go there and usually get most of the answers. And then the stuff I talk about comes from every time you zig, it zags. Oh, Pete, that happens some days, right? So anytime you feel out of sync with the market, always go back to that rules. Always go back, look at a picture, go, well, did I follow my rules or did I form an opinion? Very often when I think the market's out of sync, it's me. Guys, the trading guide is where you're going to find the answers. The trading plan is the indicators. It is the individual rules for a high probability trend trade broken down. There's a little bit about prop firms in there. I imagine once ours goes live, that'll go away, or it'll just lead to ours. Market flow for you guys that are ready to go next level. Swing trading, crypto, if that's your thing. Economic calendar, that'll take you to Forex Factory. There's your screen capture tool so that you can take pictures. You got it, Rob? Awesome. And then frequently asked questions. From frequently asked questions, guys, there's a lot of the lingo that you're going to see. But what I want to show you is the definition of a high probability trade. And this is a trade. It's defined as when each indicator on every chart agrees with the rules for a trade. Triggers are the strongest, no termination conditions exist, there's no trouble spots between your entry and your target. This is the repetition part of what I do, because I talk about this trade every morning for the first hour. I spend an entire, usually 40 or 50 minutes, talking about a high probability trade, breaking down each rule, teaching you what it looks like, what it means to you. I give you all the tools you need to study it. I give you a spreadsheet to track it. And I do that hopefully with the understanding for you guys that this high probability trade isn't the only trade that Nexgen teaches. The high probability trade isn't the only trade you're probably going to take as a Nexgen user. The high probability trade's sole purpose in life is two things really. The first one is to give you a trade that typically wins 70 to 80% of the time. It's pretty amazing to have the opportunity to be profitable as you grow and learn how to read your software. And that's the second thing that it does, is it teaches you how to read your software, how to look at your charts, how to understand what the indicators are telling you. And the high probability trend trade gives you that ability. And you'll find that 90% of your day, each and every day, is chart reading. 90% of your day is waiting for advantages. 10% of your day will be actively trading. And that's pretty much a truth, I think. But once you start getting good at chart reading, once you're focused more on reading the advantages that the indicators are illustrating, you begin to know where the market is likely to continue, and you begin to know where the market is likely to go, and you begin to know where the market is likely to stop. And then if you choose to, you can incorporate those into other trades that you can take. And Jen, you say, Mark, the high probability trend trade can be the only trade you need to be consistent. Too many strategies can be less beneficial to be fair. Jen, I don't disagree with you. I don't disagree with you at all. You guys, so Nexgen, and this is kind of like this is like the ice cream shop, right? 32 flavors. Why? Because everybody likes something different and everybody sees something different. But Jen, you're 100% right. It's funny, my brother and I were talking this morning, and for those of you that don't know, John Novak is my older brother. We talk every morning about trade strategies, patterns, all sorts of stuff. And he's been trading with one chart. That's it, one trend trade. And just crushing it because he's testing a theory that he's trying to automate. And I think he made like $9,000 on just a trend trade yesterday. So you made 300 a day for 20 days. That's amazing. That is a huge amount. Jen, that's a lot of money. That's $6,000 a month. That's 72 grand a year. That's pretty significant. If somebody walked up to you, Jen, and said, hey, here's a sack of money, 72 grand US dollars, you wouldn't be like, well, that's not very much. When you break it down, it doesn't feel like a lot, but if you look at the big picture, that's pretty amazing. So I love it. That's all you need. And then Jen, one day you may decide to copy that account, right? Turn that 300 into 600 with the same strategy. I love it. Thank you for posting that in the room. So guys, use Jen's little insight there as a motivation to not look for all the money as a brand new user, to look for the easiest money, the best money, the most consistent money. And that's the high probability trend trade. And it's only 3 rules. That's it. 3 rules. Each rule, when true, provides an advantage. Momentum, clear path, and entry. That's the recipe for a trade. Momentum comes from rule number 1 being met when you have strong trigger lines. A clear path is established when there's no termination conditions. Nothing in the way that could stop the market. And then once you have these 2, you have everything you need to build a plan. Rule number 3 is just an entry. It's pinpointing where the market is most likely to continue. And it's designed the way it's taught in this room to reduce risk dramatically and to increase profit potential. So 3 rules, each creates an advantage, and that's the recipe for a trade. These 3 rules, just to keep it simple, happen on only 2 charts. There's a lot of people that use different charts, guys. That's okay. It's rare that you'll see everybody looking at the exact same thing. It happens, but everybody has a different idea of what's easy for them to read. But for us, we're going to do 2 charts. We're going to do large chart and small chart. That's your technical terms. Large chart is a 13.2 on crude oil, the S&P. Small chart is a 5.1, and that's just a reference to the size of the bars. Your large chart, through the most current bar, the first printing bar, will define direction, momentum, and areas in the market. And guys, the large chart leads the way. It gets 66% of your advantages on the table before you ever go to the small chart. So before you even look for an entry, you're going to be able to make sure that you have momentum through rule number 1, that the path is clear through rule number 2. And then once those are established in this one bar, we're going to go take an x-ray. And your small chart refines that broad stroke of a brush that the large chart is. The large chart, it's difficult to see any sort of change on. When you have momentum up, it's going to stay up, and it takes a while for that to change. But your small chart will show all the movement inside of that one bar. And we use the small chart to pinpoint where the market's most likely to bounce and continue with the trend. That's rule number 3 for entry. And one of my favorite little interjections from one of our users is he says he won't even look at a small chart until the large chart says that he has what he needs to look for an entry. And I really like that approach to it. We use these two charts. Today's metaphor. Who are you trading with? Who are you trading against? The large crowd, guys, is a large chart. The men and women with the money and the influence to make the market do really whatever they want it to do, that's your large crowd. That's how the large chart works. And when the large chart says that you're in an uptrend with momentum and nothing in the way, it's hard to stop this giant group of people. But there's some folks with a lot of money that love to fight. And they create these little retracements, these little push. I like that. That's a small crowd on the small chart. Your rules for entry are designed to have you enter the market right where that small crowd is most likely to fail, right where the trend is most likely to bounce and continue with the large crowd. And rule number 3, guys, is if your small crowd is pushing down when everything says up, the great thing is a small crowd typically loses 70 to 80% of the time, and the large crowd wins. Your entry is designed to pinpoint their failure. It's pretty cool, which gives you the potential to win up to 70 to 80% of the time. I totally had a little brain fart there, but that's okay. So here's our morning. The same as yesterday, the same as it will be tomorrow, the same as it will be probably a year from now. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. So when is it okay to trade? When my rules are met. When I have momentum, clear path, and a defined entry area. When is it not okay to trade? When I'm missing these, when I don't have these, then it's not okay as a brand new user. We're going to teach ourselves to sit on our hands when the rules aren't met. So we're going to learn those rules. And like I said, we're going to break them down individually. We're going to talk about what they mean to you. I'm going to teach you how to study them. I'm going to give you a spreadsheet to track them. I'm going to give you everything that you need to be successful with this software as a brand new user in this first hour. You guys can simulate. Man, this is pretty amazing because back in the days, back in high school, forever ago in economics class, we actually had to paper trade the stock market. That was one of our assignments. And it wasn't being able to click get in, get out, move my stops and targets, have the adrenaline rush. We had to write it down on paper. This is what I would do. This is where it did go. Guys, that's boring. Now we got this cool video game where you can trade the market live. You can get in there, take entries, take exits, move stops, recognize patterns. And there's zero risk because it's a simulator. It's the batting cages, guys. It's the driving range. And then you had to call in the order. Yeah. So your simulation, one of the things you can do is you can take a picture of everything that you do. And you can drop it into my room in 15 hours every week. I'm here to give you feedback. I'm here to make sure that you're reading your charts accurately. I'm here to make sure that your entries make sense, that your exits make sense. I'm here to see what you've done. And if there's any way I can help you do it better, I will. So it's like a private session every time you post in my room, guys. And the only thing that I ask is that you tell me why. Why did you do what you did? What did you see? Did you see those advantages? Why did you enter here? Why did you get out here? And it's not just for me, because what you'll find is within 4 or 5 pictures, I will understand your whys. But your whys on the chart, guys, you're creating this recipe to have a repeatable trade, to have a trade where you can do the same thing every time, where you can make good decisions every time, because all rules are a pattern that describes it's a description of a pattern that wins more than it loses. So when you write the whys, you're describing that pattern, and you make your trading repeatable. And it's easier to find success if you're doing the same thing every day. Jen just mentioned that. So the first step in becoming a confident trader, ASAP, is post your trades in the room. And a lot of you hate to do it because, man, what if I'm wrong? Guys, if you're wrong, high fives and gold stars. That's where the lessons come from. It's hard to grow when there's no stress applied. But doing something wrong, making mistakes, is the easiest way to learn how to avoid mistakes because now you know what they look like. And that kind of takes us to the next one. We're going to simplify. I'm going to give you what's called the KISS plan. And the KISS plan is going to take the absolute best of the best way to enter this high probability trend trade. And from that very simple trade on that plan, you're going to get a second trade, which is what we call a medium probability trade. In a medium probability trend trade, most of your indicators are going to agree for the trade, but there's going to be a little problem. You're not going to quite have that clear path, and you're going to rely on your ability to read your indicators to manage those trades assertively and get paid a little quicker. So I'm going to give you a plan with 2 trades, both trades designed to optimize your chances of success as a brand new user as you learn to read your indicators. Your job for the first 20 days with me is to learn the looks that you're going to commit to learn the Fibonacci and trigger looks so that they're easy. And that's the second piece of getting to where you want to be, is taking the spreadsheet that Nexgen gave you, and guys, start taking pictures like your life depends on it. Start annotating pictures like there's somebody giving you money to do it. The first tab on the spreadsheet is the core, that momentum and path. It is strong triggers in green and then weak triggers in red, and it is a clear path in green, and it is termination condition in red. So you're going to build up the ability to recognize your first 2 advantage at a moment's notice, and you're going to know exactly what it looks like to not have those rules met, so you know to sit on your hands and embrace that 90%. Your second tab is where I steal your good stuff from the room, guys. If you post a trade in this room, it's a high probability trend trade. It's a well executed medium probability trend trade. Guys, you're going in the Hall of Fame. I love taking your pictures. And there's over 400 pictures of you guys being brilliant with this software. Go through new users, study those. It'll create that pattern recognition a little bit. How to pinpoint your entries, guys, for both long and short trades. I'm going to give you on the plan a super mechanical management plan designed to help you understand stop placement and getting paid quickly. And then you're going to break out of that. Most people do. You begin to hold for bigger moves because you begin to believe in advantages. There's a whole section dedicated to some management ideas. And then there's patterns that repeat themselves. And this is kind of where you're going to see in the second hour a lot of people doing things outside of this high probability trade. That's what I'm talking about, Trina. And these patterns begin to present themselves. And they're going to jump off the page once you're good at chart reading. So you're going to take your plan, the third tab, and you're going to fill it out with all the pictures the same way I did in the client trades. And then finally, there's the trade tracking sheet. And this is, I think, what gets people where they want to be the fastest. Every time you take a trade, you take a picture. And guys, there's how to annotate for the best feedback, how to get these into the spreadsheet with a hyperlink, a link to the capture tool, and then an idea of what we're looking for, guys. Every time you take a picture, every time you annotate that chart, you're gonna mark it up. Did I follow my rules? How did it end up? Where are my advantages there? And then most importantly, you're gonna drop it in the room the same way Trina just dropped 173 pictures in the room. Just kidding, Trina. But what's gonna happen is Trina's gonna tell me on these charts what she saw. You better, Trina, right? And when she does, she's going to say, check it out, Mark. This is where it's coming from, and this was my advantage, and this is whether or not I had room, and that's my entry, and that's my exit. And guys, I'm telling you right now, what Trina just posted in this room is the highest probability trend trade. This is everything that we're going to talk about today. Trina, this is gorgeous. We're going to revisit it in the second hour. But guys, look at the information she gave me. So she's going to take this picture, and she's going to go to her spreadsheet. And she's going to drop it in her trade journal. And she's going to go, this is amazing. I had all the advantages I wanted. And she might put something like, Mark said never miss this one. So what she's doing is she's building her plan. She's writing exactly what it looks like to have. And her annotations create the recipe so that it's repeatable. And guys, this feedback from class, this is probably the most important part of the spreadsheet, in my opinion, because if you go back every morning and you look at yesterday's trades, and you ask yourself, what worked? What you're going to do is you're going to define the looks that are bringing your success. You are going to really hone in on repeating those great things. And you're also going to ask yourself what didn't work, because you're brand new and there's going to be stuff that didn't work. Or maybe you're building a new plan and there's going to be stuff that didn't work. That's okay. We're going to identify it. You're going to look at it. You're going to say, okay, this is what I need to avoid. Maybe I need to stop trading with weak triggers. Maybe I shouldn't be trading in determination conditions. And what you're going to find is not only the patterns in the market that are bringing you success, but you're going to find the patterns in yourself that are bringing and taking success from you. And guys, that's what I do. You give me 5 or 6 pictures, I'm going to recognize your challenge. And we're going to come up with a plan together to beat it, to circumvent it. So, our next hour, we're going to learn rules. You're going to simulate and post in the room. Understand that the second half of class is where you get all the feedback. I will respond to every chart in the order that it came in. If you need to leave early, maybe you've got to go save the world or walk the dog, go, hey Mark, I got a split. Can we take a look at my pictures? The answer is always yes. But I like to look at them after rules, because then you guys can get something out of everybody's charts. We're going to simplify. I will hand you everything that you need to be successful with this software. The only thing that Nexgen cannot provide you is the experience, the repetition to make it easy. So you're going to have that spreadsheet to build that repetition and create that recognition. I love the first hour. Now let's talk about what we're looking at. Do I have any new users? I thought I was going to have 1 or 2, but I don't see any new names in here. Right now, we're just going to talk about what we're looking at. So when I open up my workspace, I've got 2 charts, large and small, and both charts are going to have trigger lines. So the only thing that you need to know, I'm not a techie kind of guy. I am a daydreamer. Guys, these are small triggers. They're 2 solid lines to create the small triggers. They're a fast-moving average, and whether it's a large chart or a small chart, they look the same. Same with the large triggers. They're dashed. They're a little bigger. They're a slower moving average, and no matter what chart you're looking at, they're always large triggers. So small versus large, that's all you need to know. We're going to use trigger lines to define momentum, make sure that rule number 1 is met. We're going to use trigger lines to define termination conditions to make sure rule number 2 is met. And we're going to use trigger lines to define the best of the best entry, making sure rule number 3 is met. So know the difference. If they're green, they're up. If they're red, they're down. Every chart has areas. Areas are pretty much lines on a chart, guys. You know that large crowd that I was talking about? These lines are where they make decisions. So we're just going to name them. There are divergence high lines, which is a magenta line that prints if there's a loss of momentum at a pivot. And then this divergence low line, same reasoning, it's baby blue, cyan. If there's a loss of momentum, you'll see it print. You're going to be able to identify Fibonacci resistance, yellow 1-to-1s, Fibonacci support, and then that little squiggly dude, that's your mid band, another moving average. If price is above it, it's green. If price is below it, it's magenta. Green mid bands may behave as support. Magenta mid bands may behave as resistance. So you're going to see these on both charts. On your large chart, they're going to define trouble. On your small chart, they're going to define entries. So let's break it down. 3 rules, guys, that's it. We're going to do them one at a time. I would encourage you, learn the first one. And then when you're like, yeah, that's easy, go to the second one. And then when that one's easy, let's find an entry. So we're going to start with momentum. Large chart, 13-2. It needs strong trigger lines. It doesn't want them, it needs them. And guys, strong trigger lines only happen if you're trading with the trend. So let's define the trend first. If the color of the background behind your first bar on the large chart is green, it's going up. If it's red, it's going down. Pretty simple. You're going to look for rules to be met to trade in the direction of the trend. Pretty simple, I think. If you're colorblind, when your small triggers break above the large triggers, it paints it green. When the small triggers break below the large triggers, it paints it red. And that kind of comes into play because the only way you can have strong triggers is if the small triggers, the large triggers in the background is green, or the small triggers, the large triggers in the background are red. The colors have to match. That's going to keep you out of some shenanigans. In an uptrend, your small triggers will be up and above the large triggers. In a downtrend, your small triggers will be down and below the large triggers. And guys, it's the separation between the two. It lets me know that the odds are favorable for the market to continue in the direction of the trend. And odds favorable momentum, guys, you're going to see it annotated on charts, OFM. You're going to see odds favorable momentum as the basis for an awful lot of trades. Odds favorable momentum pushes a market in the direction of the trend. Odds favorable momentum can break key areas. Odds favorable momentum can even cover some of the mistakes that new users tend to make. Sorry, my NinjaTrader crashed. I'm going to open that back up. So strong triggers lead the way, guys. And then once that workspace is up, we'll go look at a real world example. I like to tell people, picture scissors that are open. And again, I'm a visual kind of person. But if you look, the scissors are open, guys. And the only way to cut, the only way to get work done with scissors is for them to be open. The blades have to split. There has to be that separation. Otherwise, you're just going to take a stab at things. And when the scissors are closed, when the small triggers work their way back inside of the large triggers, we call this weakness. In this weakness, the phrase I want you to associate with it is anything can happen. Anything could happen up or down. The market may reverse, the market might retrace, the market could bounce. Key Fibonacci areas are more likely to hold. So once the advantage of momentum is gone, the market is less likely to push in the direction of the trend. Key areas are less likely to break. It's less forgiving if you make a mistake. So it's a pretty simple look. I think this is typically one of the easiest lessons. Separation is strength. So, better dad, you're going next level on me. For the brand new users, and I've got a picture to help you with that. For the brand new users, let it be strength, avoid weakness. Guys, remember, first hour is the best of the best, the highest probability. But I love that question, and let me answer it with interpretive dance. Not really. So, odds favorable. It's always the best. Always the best. You should be giddy when there's separation. But here we go, better dad. With both triggers down, when one of the two small trigger lines is inside of the large triggers, this is the first sign that momentum is slowing. So you're going to say to yourself, all right, it's slowing down, but there still may be some opportunities there as you grow with the software, as you begin to recognize patterns, and you'll go to your small chart and make sure that there's nothing going wrong. Even when the small triggers work inside, when anything can happen, guys, you might find a way to capitalize. And what you'll do is you'll say, all right, I no longer have momentum. Anything can happen up or down, but my path is clear and my entry is completely defined and it's low risk. I'm willing to take a shot with the absence of momentum. I will create a medium probability trade out of this. And that medium probability trade just needs to be managed a little more assertively. It's got to be managed well. Does that make sense, better dad? So there may be opportunities all the way down, but until you're super comfortable, let it be one or the other. Commit to that advantage of momentum. It is rule number one for a reason, guys, because momentum can push a market. And let's just take a look. This is the NASDAQ, and I don't think it's done loading yet, so I'm going to leave it alone. Once I have momentum, once rule number one is met, I'm going to go to rule number two. It's like a flow chart. If then. If I have momentum, then I'll look for a clear path. Well, a clear path means that there's no termination conditions. It means that I'm going to have room to my targets. And it means that I'm going to ride that wave of momentum and there's nothing in the way to create a bounce. So a termination condition, all it is a Fibonacci-based indicator that may reverse the market or create an untradeable bounce. It may break. There may be a fight there. You'll never know what the reaction's going to be. But you're going to be able to identify it by comparing the area, those horizontal lines on a large chart that we talked about, where the large crowd makes decisions. You're going to compare those areas to the trigger lines. And it's going to tell you whether or not you should sit tight or it's all good to go. So we're going to use Fibonacci support and resistance. We're going to use yellow 1-to-1s divergence low lines and divergence high lines. And I want you to say to yourself out loud, this is where the large crowd is most likely to make decisions. So the recipe to identify a termination condition is first you let price reach the area. Let the dynamic Renko bars reach Fibonacci resistance. Let the dynamic Renko bars reach Fibonacci support. Price reaches the area, it sets off the decision-making process. And then we're done with price. Price is no longer a part of the equation. When price reaches the area, I want you to ask yourself, where are my triggers? If you reach resistance and your triggers remain below, guys, it's a termination condition. It may create an untradeable bounce. It might create a fight that you don't want to be a part of between the buyers and sellers. It might break, and it may reverse the market completely. Your large triggers might go from green to red. If a termination condition reverses the market, we're going to call it a strong top. And we're defining this strong top because it means that the decisions made at that key area were so impactful that the market is now going the other way. It reversed the market completely. The strong top is rule number one for a couple other trades that Nexgen teaches. And a strong top, while it's not a rule for the high probability trend trade, it sets you up for the highest probability trend trade. And then the sellers are in control. That's all you need to know. They're pushing it down. The momentum is strong. It starts to weaken, and then weak triggers. Price reaches Fibonacci support. All you have to do is say, where are my triggers? And if they remain above support, you know that it could create an untradeable bounce. You know that it may reverse the market, become a strong bottom. You know there could be a fight there, and you know that it could break, but you'll never know which one it's going to be. So if rule number 2 isn't met, no trades into the area, guys. Sit tight. Just wait. Can we get that big? Man, I'm having challenges. I'm going to close out Ninja Trader real quick. Sorry, guys. I'm stuck. Dun, 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 dun. All right. And I'm going to bring that back up. So, rule number 2 not met. No trades into the area, guys. Wait for the reaction. You'll never know what it's going to be. It's okay to do nothing. But areas break all the time. This is what it looks like when an area breaks. Number 1 is showing it as a termination condition, because every time you reach a line, guys, it's probably going to be a termination condition, at least for a moment. Price reaches Fibonacci resistance. I am done with price. I'm going to let the trigger lines tell the story. The trigger lines all remain below. And because they're all below resistance, no long trades into that area. And it doesn't matter what happens next. In the moment, your highest chance of success comes from waiting for the reaction to see what they do. If they're going to break, if that area is actually going to break and become a clear path, both lines of the small triggers and both lines of the large triggers must get to the other side. Has nothing to do with price bars. Whoops. Has everything to do with the trigger lines. The trigger lines tell the story. So once you can do that, once you recognize, sorry, I am multitasking. Once you commit to the idea that it's either a termination or a clear path, this is the brand new user's foundation. This is what you're building from. It opens the door for number 2 here. You'll notice that there's a pause sign, not a green arrow or a stop arrow. Stop sign. This is your second trade look. This is the second look on the plan. And what this is when your small triggers absolutely smash through the area with odds favorable momentum. You've got to get 3 or 4 points above. There has to be separation between the two. But your large triggers they're lollygagging. They're still below the area, so you know it's not broken. With this momentum, you can say to yourself, this area has the potential to break because of that momentum, because of those trigger locations, but it's not broken yet. Rule number 2 is not met yet, but I can still take a trade if it presents itself. I'm just going to have to manage it assertively. because it's not a high probability scenario anymore. This puts us into the realm of medium probability. This particular look, this trade, is on the plan that I'm going to give you. It's called the 50-50. We're not very clever. 50% of my triggers are through, 50% are not. Guys, this will be the majority of your trades. Trust me on this one. This will be the majority of your trades. So you're going to rely on your chart reading so that you can manage these assertively. So go in the other direction, it's the same thing. First it's a termination, then it has potential, then it's a clear path if it's really going to break, guys. And once you have a clear path, your path is clear. Once you have a clear path, you are looking for entries until you reach the next area. And when you reach the next area, you go right back to number one. And that bums some people out, because there will be times when your path isn't clear because the areas are stacked a bit. And guys, this really is 90% of your day. 90% of your day is just doing nothing, and it's okay to do nothing. The futures markets trade billions, actually every hour. It's trillions a day is exchanged in the futures markets. If you can successfully capture $400 a day, that's a six-figure income based on your trading. So what we focus on, new users, is capturing with momentum, trading away from areas until we get to the next area. And then we're cool sitting on our hands, doing nothing, waiting for that best of the best. And if you keep it simple and keep it focused, you'll be amazed at the success you can realize. Is everybody good? Large chart. Let's see if that chart came up. Here we go. So it starts with momentum, separation. And then once we have separation, we got to respect lines. No triggers through, look at the bounce. Right to resistance, look at the bounce. Weak triggers, look at the retracement to resistance, to support to resistance. And then it breaks. And then we get all this little wonky right at the areas, and it breaks. And there it goes up. And that is what we call a strong trending market. And it's no surprise that the first big bounce came from a key Fibonacci area. Guys, this is your 90%. And now it's trying to go up, it looks like. They're trying to build momentum, but we don't have a clear path yet. So large chart's going to define the direction. It's going to define the momentum. It's going to define the areas. And when the large chart's done, we're going to look for entries. That comes from the small chart. Your small chart shows the change that you can't see on the large chart. Your small chart shows fluctuations that you'll never see in that one bar. So there is one termination condition that we accept on the small chart, and that is 3 divergences in the same price range. Divergence is a loss of momentum. That's all you need to know. Anytime one of these cyan lines print from a low or a magenta line prints from a high, guys, it's a loss of momentum. And 3 losses of momentum in the same price range may terminate the trend, may create an untradeable bounce. So if I'm looking for entries and I see 3 divergences, no short trades. Guys, if you see this on a higher time frame, that's pretty significant. And very often there's bigger moves the other direction. So 3 divergences on a small chart is the only time I'll say, okay, I'm not looking for that entry area. But if that's not there, if I do have momentum, if my path is clear, if 66% of my advantages are in play, guys, I'm going to use a limit order to buy or sell a pullback in an area inside of triggers. I'm going to wait for the market to come to me with a limit order. I'm going to buy or sell that pullback, the retracement, the fight created by the small crowd, and I'm going to wait for them to fight all the way to an area, fib midband or yellow 1-to-1, and I want that area to be inside of triggers. And guys, that's a very important piece of the puzzle, because your large triggers on that small chart will define where the retracement is most likely to go. Price returns to large triggers. Happens all the time. Market pushes away and returns. It happens on a small chart, it happens on a large chart. Let's go to where the market isn't actually screaming in one direction. Price pulls away, returns to the large. It pulls away, returns to the large. Pulls away, returns to the large. Guys, this is one of those things that you can really count on. So your entry chart has both the 5-1 and the 13-2 large triggers on it. The 5-1 are going to be smooth. The 13-2 are going to have little steps. We call those synthetic. And all these are going to do for you is define where that pullback is most likely to go. You're defining the retracement using the large triggers. So, as we focus on the best of the best, favorable large triggers is the best look, guys. When your large and synthetic triggers are overlapping one on top of the other like two snakes riding piggyback, guys, this is the best look you could ever hope for, because the area where the market is most likely to retrace is the absolute smallest. And then when you put a fib, a midband, or a yellow 1-to-1 inside of that retracement zone, you're pinpointing precisely where the bounce is most likely to occur to continue with the trend. So, favorable large triggers is your best look. You're going to see this though, and as you grow with the software, you become more comfortable with your rules and your entries. You'll be able to use that one, but that's the best of the best. So let's define an entry. This is my favorite part about the rules. I'm still floored every day at how effective this is, guys. Once the rules are met on the large chart, I'm going to turn my attention to the small chart. Once the rules are met on the large chart, guys, minimize it. Don't get distracted by it if you don't want to. Everything is going up. So my large chart in this instance has momentum. It's an uptrend. There's nothing in the way. And I look at my small chart and it is screaming to the upside. And I'm saying to myself, oh no, they're going to go without me. I'm never going to get paid. This stinks. I hate Nexgen and I hate Mark Novak. And then there's the beginning of the pattern. You get this reversal bar. You get this down bar when everything is going up. And this down bar just says, hey, guess what? The fight is on. The small crowd showed up. They're feeling a little ornery, and they're going to push, guys. And once you get this reversal bar, you're going to define where they're most likely to push, where those down bars are most likely to return. And it's from the highest point of the triggers to the lowest point of the triggers, the large triggers. It doesn't matter if it's synthetic on top of large or large on top of synthetic. From the top line to the bottom line, this shows you precisely where the market is most likely to retrace. So the tighter they are one on top of the other, guys, the better it is. The smaller the window, the more accurate. And then you're going to take that big range and you're going to make it considerably smaller. Because now that you understand where price is likely to retrace, you can define where it's most likely to bounce, where the continuation is most likely to occur, where the small crowd is most likely to fail. You need an area inside of triggers. And areas can be fibs, midbands, and yellow 1-to-1s. And let me say, areas are not divergence highs and lows. Areas are not those pink 1-to-1s that you may have on your workspace. It's consistent. Fibs, midbands, and yellow 1-to-1s. And then that phrase again, inside of triggers, inside of the retracement zone. So this box, from the highest area inside of triggers to the lowest area inside of triggers, it shows me where the market is most likely to bounce in the direction of the trend from the large chart. Where it's most likely to bounce, not where it's guaranteed to bounce. But because my rules just describe a pattern that wins more than it loses, my job, your job, is to activate that limit order 2 ticks above the highest point of area of support inside of the triggers. And guys, you've done all you can do now. The only thing that you will ever be in control of as a day trader is whether or not you follow your rules. Now it's up to the market. But if the market pushes down to your limit order, if that retracement goes where it's most likely to go, if it hits where it's most likely to bounce, guys, you're in a long position. You just bought the market. And you bought the market with the advantage of a market where the odds are favorable for it to continue up because of the strong triggers on the large chart. And you have the advantage of a clear path, giving you room to your targets because there were no termination conditions present. And you have the advantage of having entered precisely where the market was most likely to continue with the uptrend. And ladies and gentlemen, this is your high probability trend trade. This is your high probability trend trade entry. All we've talked about is entering the market. We haven't talked about management. We haven't talked about anything beyond being able to pinpoint where the market is most likely to continue. Are there any questions, guys? Large chart rules are met. Wait for the reversal bar. When the reversal bar prints, identify where the retracement is most likely to occur, and create a window from the highest point to the lowest point inside of triggers Guys, this is where it's most likely to continue, but because of the advantages on the large chart, your limit order goes 2 ticks above. And because you're defining where the market is most likely to continue, where it's most likely to bounce, where it's most likely to retrace, you're going to understand that anything outside of that window, anything below those triggers is where the market should not go. This fib is where the advantage of rule number 3 is no longer in play. Anything on the wrong side of the triggers, below them for a long, above them for a short, is not a part of the equation, because once price breaks through everything that was most likely to stop it, your advantage is gone. And guys, we call that where the market should not go. And this is your initial stop. So your ability to define entries is going to get you started on management. This is where your first stop's going to be placed, 4 to 5 ticks beyond those triggers. And you're going to say to yourself, the market shouldn't go here if this is going to be part of that 70 to 80%. But the market's going to go there 20 to 30% of the time, because that's how math works. So by keeping your stops right outside of that range, guys, you can take smaller losers when you do take losers. And losers are a normal part of a positive equity curve. There's no reason to keep $500 or $600 of risk on a trade, because once you're on the wrong side of the triggers, you don't know if, when, or where that market is going to stop. So the whole goal for your first 20 days with me, this is what I tell people, is go find this pattern, go test this pattern, go prove this pattern works more than it doesn't, and become confident enough to put your limit order in the right spot. And this is how you do it. When the large chart rules are met, guys, and you can scroll back historically and do this, when the large chart has momentum and path, you're going to see these tails. And these tails happen when the small chart retraces. You don't see any change on the large chart. The large chart is still up. It's still strong. The path is still clear. But on a small chart, you get a reversal bar. You get an entire pullback, a bounce, and then that next bar up here doesn't even start printing till somewhere up here. That's the refinement process. You can scroll back historically and circle tails on the large chart. And if it bounces off an area inside of triggers on the small chart, this is your pattern. This is the one that you're committing to memory. I want to talk about some common things for brand new users. This is where you're making the decision to trade, guys. The top of these bars, when the rules are finally met, that's where your retracement starts. And there's a lot of people that say, man, there's just not room. There's 8 ticks. There's only $80 worth of profit before I reach an area that could stop the market. You're absolutely right. But our entries don't come from the top. Our entries come from the bottom, from the area inside. That $80 worth of potential profit turns into $300 worth of potential profit if it goes there, because you wait for the area inside of triggers. So if you jump in up here, guys, the only thing that you've done is you've increased your risk dramatically, and you've shortened the space to get to your target. If it doesn't quite reach your entry and the market heads up and you freak out and jump in here, once again, all you've done is shorten the distance to targets and increase your risk. Your best entries, your lowest risk, your highest profitability comes from waiting for the pullback to areas inside of triggers. You can study this pattern historically by going back on your large chart, and if you see odds favorable momentum, if you see that potential to break, circle a tail. And those were yesterday morning, because today has been straight lining. So I'm going to go back and I want you to see what these tails look like. There's your first tail. And this one is all the momentum potential to break, pulls right back to a mid band, never makes it outside of the triggers. Your second one pulls right back to the mid band inside of triggers, never makes it outside of the triggers. So guys, this is your pattern. You can go back and study it. I don't want you to take my word for it. I want you to scroll back and circle a tail. And I want you to say, all right, that had momentum. The potential was there. The pullback was right to support inside of triggers. They never would have got my stop. And there's an awful lot of profit potential there. And then scroll back and find the next one. And what you'll see, if you do that, is that the time from this circle at 8:25 to this circle, this happened the day before. 90% of your day is doing nothing. But if you learn how to capture the best of the best with confidence, manage it appropriately, guys, you can find an extraordinary amount of success with this high probability trend trade. So you got to learn how to see it. This is where I start giving you everything that you need. How are we doing so far? Is everybody okay? It's super quiet today, except for Ron and Cav. They're flapping their gums a little bit, but you know, we expect that from them. You guys are good so far? It's just a pattern, guys. Hey, Morgan. Chart reading 101, guys. So the goal, your goal should be that you can look at your large chart and identify momentum and path. This is the core of the education. This is the foundation. And understanding these two concepts, it's going to open the door for more opportunities should you choose to look for them. So, guys, take 25 pictures each and take the time to explain the whys on the chart. Why is it strong triggers in this picture I took? Well, because there's separation between the small and the large. The colors match. This is odds favorable momentum. This is rule number 1 being met. Take the time to type all that out and you create a correlation between what the brain sees and what that vision means to you. And you're going to do the same thing for weak triggers and describe why they're weak and why you have a clear path and why it's a termination. And this is designed to go in and put it in this basic rules section. Guys, I've already given you over 250 pictures to get you started. But if you take the time to get 25 pictures of each, post them in the spreadsheet, study those pictures each morning. Take 3 or 4 minutes before you try to be a trader to reinforce your chart reading rules. And what happens is you'll never make a mistake on whether the rules are met. You'll make maybe poor decisions trading into a termination condition, or you might make a calculated decision of trading without strong triggers, but it'll never be on accident if you put the work in. So as you go take those pictures, I'm going to give you pictures of what they look like. Little cheat sheet, something to compare yourself to. This is the high probability trend trade checklist. And this is 2 pages. The first one is the rules, a checklist to enter the market. And this one includes that strong top or bottom, which isn't really a rule. It's a warm fuzzy giver, guys. This is unicorns and sunshine. And if none of your triggers get through that termination condition and it reverses the market, it's a strong top. And that strong top is the precursor to the highest probability trend trade you could ever take. So this helps you define a strong top or bottom. Learn the language, and it makes it easier. It's going to ask you about momentum on both charts because that's the best of the best. It's not mandatory on both. We need large chart momentum. But if it is on both, again, optimizing your chances of success. This is always momentum. This is always weakness. Just know the difference between the two. No termination conditions. Guys, not trading into areas on the large chart where the triggers haven't broken. Insisting on a clear path. Understanding that if it's only potential, it's not the best, highest probability trade you can take. And then finally defining your area inside of favorable large triggers, knowing exactly where your limit order goes and exactly where the market should not. And that'll come in play for stop placement. So the second page is print this out, put it on your desktop, laminate it, use a dry erase marker. Whatever you need to do, because nobody in the history of this checklist has ever done worse than 70%. So if you're a skeptic, if you think I'm full of beans and Nexgen is snake oil, and I love it when you guys do, if you go back and you follow these rules, whether it's historically, whether it's live, you're going to be with me forever. And that's just the way it works, guys. Because you'll know that this works and you're just learning to work it. There was an engineer client of ours. There's been a couple that have done it. But this one in particular took these rules over the course of 400 days. And it was either 82.3 or 83.2% winners over 400 days of trading. And the one thing that made the test so successful is that the rules were followed on every trade. Guys, the most successful traders that you will ever meet have the ability to do the exact same thing every time they enter a trade, to do the exact same thing every time they manage a trade. And it's that repetition, it's that consistency, it's that adherence to rules that creates successful traders. So I'm going to give you something. This is your plan, guys. This is your first written plan. This is the one that Nexgen gives you so that you can learn to read your indicators and create your own if you feel the need to. This KISS plan has been used by new users to get funded in prop firms inside of their first 30 days. It was kind of cool because when that happened, there's a guy, Chef, that shows up to class a while. He's done it. But when Chef was doing it, there were two other users in my same class, two other new users that were getting almost identical results, taking the exact same trades as him, having the exact same management and finding the same results. And it's pretty awesome because it doesn't matter where you are, what you know about the software or the markets. It's just a pattern, guys. So the KISS plan is a stepping stone in your learning journey, and it's designed to optimize your chances of success with the high probability trend trade. And that just means it's the best. This is the best way you could ever take a high probability trend trade. It's not the only way. You're going to create variations, but through simulation, study, class feedback, continuous practice, that's when you begin to learn your variations. That's when you're creating that recognition of the indicators, and you will create your own plan based on your personal goals, and it'll be because of how you read your indicators. So there's two things you need to know before you sit down to trade and you're not on simulator. Not on simulator is a key part of that, because when you are on simulator, break everything. Make every mistake. Just post it in my room so we can talk about it. We'll learn how to avoid mistakes, and we can do it in the safety net of simulator. You have to know why you're going to enter. If you rely on hoping, wishing, wanting, gut feelings to enter, it rarely works out. The simple answer, and I guess I love it, the Sunday school answer, is because my rules are met. That's why I'll enter a trade. Because my rules are just a description of a pattern that's been proven to win more than it loses. That's why we annotate charts. We're describing the pattern so that we can create the correlation between the look and what it means to us. And it has to be proven, guys. Has to be proven to win more than it loses. And if you verify it, if you go back and do the study, if you learn to trust it, there's no reason to not consistently enter when the rules are true, because you know that you'll never know what's going to happen next, but you know that it's a pattern that wins more than it loses, and your rules help remove the emotions a lot. You start focusing on the execution of the plan rather than the results of your efforts. And you have to know why you're going to exit, guys. And exits are taken either at profit targets or when the advantages that you had to enter the trade are gone. News, thanks, Cav. Prior to the targets being reached. So, for example, if I enter a high probability trend trade, if the market pushes beyond my triggers and areas, I need to exit. My advantage is gone. If I enter a high probability trend trade and 3 divergences print, I need to exit. My advantage is gone. So being able to recognize the advantages getting you in is going to let you know when they go away. That's why we study both sides of it. Define your entry. This is the first piece. Define your entry. Because your great entries create very manageable trades. Your great entries are going to reduce risk. Your great entries are going to increase profit potential. So make sure that you can get in the right spot. And then you have to manage it. And this is when palms get sweaty and pulses go up. The KISS management plan is based on 2 contracts. And the KISS management plan is every bit as if-then as your entry is. It's very mechanical. It's very pragmatic. And it's designed to do 2 things. It's designed first to help you understand stop placement, to protect your investment. And then second, and I think this is probably more important than first, guys, it's designed to keep you focused on getting paid. Because getting paid is why we're here. Getting paid is the whole goal. I don't care how busy I am. I care what my P&L is at the end of the day. Because I can't buy nice things from being busy, but I can buy nice things from being paid. So the KISS plan is designed to help new users do that as you develop your own management plan. And it's 100% dependent on your ability to enter the market where the market is most likely to continue. So focus on entries, get good at those. And if my entry is 2 ticks below resistance inside of triggers, then my initial stop is 4 to 5 ticks beyond the triggers. And then my hands are in the air and I roll my chart back and there's nothing to do because I have defined where the market is most likely to continue and I have defined where the market should not go. And you will know your risk before you ever enter a trade. You'll know how much money you have to risk in this trade. And if this happens to be $150 per contract, and if you say to yourself, you know what, that's too much, I don't want to take this trade, I'll just put my stop below resistance inside of triggers. You're more likely to get hit, to watch it bounce and run without you. I'll just put my stop in the retracement zone because, 150 is too much. And guys, these like chum in the waters. Cut a toe off and jump in the water somewhere outside of Sydney, Australia. Great white's going to eat you. So getting in where it's going to bounce, most likely. Being willing to put your stop where the market should not go. Your targets are predefined, guys. $100 and $200. As a brand new user, just let it play out. Don't adjust anything. Enjoy the ride. See what happens. You're on simulator. Guys, if a reversal bar prints in the direction of your trade, it is confirming that now the market is going down with momentum, with the trend, with the clear path. This confirmation bar is your first stop movement. You're going to redefine where the market should not go. And your new stop is 2 ticks above that reversal bar. Some of you will say to yourself, man, my entry isn't perfect. That's too much risk. I'll wait for the confirmation bar. At least then I can put my stop 2 ticks above it. So now you have 30 ticks of risk per contract as opposed to the 150. And your targets haven't moved. They're still 100 and 200, guys. So you're either going to get stopped out for a smaller loser, or it's going to go to your first target. And if price reaches your first target, one contract is automatically removed. Those funds go into your account. You're a winner. You just won $100. And a lot of us are like, oh, $100 isn't that much money. None of us would step over it on the sidewalk, right? $100 is awesome. You got paid. Confidence comes from that success. And now you're going to move your stop to break even. Now you have absolutely nothing to lose and profits have been taken. And that's just helping you trust the large chart because this is a look that's more likely to go to the second target than it isn't. And your second target's only $200 in the distance, which means that if price reaches it, that's a $300 trade. And guys, Jen says that she shuts down at $300 every day because $300 every day is $75,000 a year based on 252 trading days. And the cool thing is that copiers are a thing. You can make $300 with that one high probability trend trade. You could copy it over 10 accounts, make it 3,000. You could copy it over 20 accounts, make it 6,000 a day. It's the same thing. So we're looking for daily profits, reach consistently. And that's what reaches a long-term goal. And as you grow, learn, and understand more, the potential for higher reward really becomes evident. So this is your introduction, guys. This is your introduction to the software, how you're going to learn to read your indicators. It's that high probability trend trade that opens the door for that potential to break trade. It's what you learned about strong tops or bottoms that lets you follow the checklist. It's understanding that divergence is a loss of momentum, keeping you out of that medium probability trade when you're giving too much away. So we have done what we're going to do, right? Here's our first hour. I'm going to give you guys a zip file. It's called All You Need. Again, another clever name. NASDAQ went crazy with the news. And it's a good thing you guys knew it was coming, right? Guys, that zip file that I just dropped in the room is all you need. And inside of that zip file is the chart reading 101. Inside of that zip file is the high probability trend trade checklist, the KISS plan, the daily goals, the PowerPoint that I use to teach the room, a super simplified 2-page version of everything that we've talked about for an hour. Everything you need to be successful is now in your hands. The only thing that you don't have from me is the repetition. The only thing you don't have from me is the seat time to feel comfortable. And guys, that's where your part comes in. That's where you're taking pictures. That's where you're posted in the room. That's where the feedback comes from. And that's what we're going to do in the next 2 hours is we're going to talk about everything that you post. We're going to talk about momentum, path, and entry. And no matter what kind of trade it is, we're going to focus on the chart reads. We're going to focus on the basics. And I'm going to tell you, great job. You read it correctly. Maybe you didn't read it right, and I only know that if you tell me what you saw. If you went counter trend, guess what? We're going to do the chart read. I'm going to have to mention that you went counter trend, but we're going to look at the big picture on everything. And guys, don't be the trade police. Enjoy not having to worry about anyone but yourself and just take the lessons out of it. So I'm going to go stretch my legs for 5 minutes. When I come back, let's see, there's crude oil. Look at that. It had the potential to break, but it didn't. I'm going to open up the S&P while I take a break. I'll see you guys in about 5 minutes. Go stretch your legs. All right, guys, let's get into that second half. Market's moving, isn't it? Gotta love that. All right, guys, so I'm going to scroll up to the top. I'm going to start looking at pictures. Man, this is a small crowd today. That's okay. Don't play trade police. If you don't understand a chart, talk about it. I'll talk about it with you. We're going to go through it. Wayne, you got us going. There we go. So we're going to take a look. And guys, this is kind of a chart read here. So possible strong top. Wayne, I always try to avoid the temptation of saying things like possible strong top because it's also possible that it just continues up and runs forever. I never know what the outcome's going to be. But what Wayne's recognizing is, man, we hit a fib, we hit a divergence line. We're coming back into that divergence high. and we're weak, and this is when areas are more likely to hold. And Wayne says, man, with that pivot stop out, with these weak triggers, with this outer band, yeah, I have a pattern where right from that one, I can take a small shot. And Wayne, this is the one, I put it in the room earlier. If you're going to try to go counter trend, right? If you're going to try to, when everything's been up, be the first one in, that's the way to do it. The large chart says absolutely no longs. And Wayne said, I've found a pattern to go short when this says no more longs. And Wayne, I love this. I think that is about the best use of that heartburn. Did it go up or down from there? Just curious. Next pick. It did go down. There you go. Recognizing patterns. Follow up. I love it. I should have known. You're thorough. And there you go. Can't go long anymore. Let me see if I can find a pattern to go short. There's your heartburn trade. And then Wayne, that's your white bar trade right there. So even if you didn't catch the heartburn, that's your little more conservative short to ride that wave. Really nice. And then everything's going down. Trend trade, odds favorable, clear path, 220. Heartburn 0, heartburn 150. All right. So everything says down, and you take the trend trade, and you take it to the divergence low. And then you are super strong into a fib, and you try to go counter, and it just doesn't work, and you get out break even. You're like, let me give it a shot. And then when it hits the outer band properly, your little heartburn train worked a little better. And you also had two divergences. The triggers were weakened, getting in on the way up instead of the way down. I like it. And man, if you're pulling money out of the market with the easy ones, it opens the door to take a shot and manage aggressive. Your management's awesome on the second one, Wayne. And then once you actually hit that outer band, it works. So I think, did you jump the gun a little bit on this one? Or no, it hit it. I wasn't sure. Good stuff. Little advanced, but great chart reads. Great chart reads. Odds favorable, potential to break, perfect entry, easy money. And guys, that is beautiful execution on a 50-50. Let's get you in the spreadsheet because that's an awesome 50-50. Little something for the study guide. Good stuff, Wayne. Great trading, dude. Out of all those trades he presented, one of them didn't win, and his chart reading got him out break even. That's amazing. Boaz. Perfect top termination, reverses the market, strong triggers, no terminations, beautiful entry, making money. You posted this one yesterday too, I think. Or is that today as well? Is that today, Boaz? Or was that yesterday morning? Looks familiar. Maybe you're just doing the same thing over and over, finding that success. Great trade. Beautiful trade. Beautiful trend trade. And then Wayne, you got those fixed for me. Oh, look at this. High probability, odds favorable, weak top. Where do you see weak triggers? I see the strongest triggers ever. Wayne, I think you just got excited typing. Oh, there were weak triggers at the top? This is why I quit reading minds when my wife put a ring on my finger. That was it, so I can't see that. And this is the things I notice though. When I see odds favorable and weak triggers, I'm like, those can't exist in the same plane. So you take the first one, pull back to the mid band, 2 ticks below, right inside of the retracement. And pretty easy money. Nice job. Really nice job on that one, Wayne. Momentum and path, guys. We're seeing a lot of it. Chili dog. Everything says up. Strong trending market. So, Wayne, you did break the chili dog rules. because you didn't let the back of the bar clear the fib. And that's rule number one, is the back of the bar clears. So maybe this is your own version of it, but letting price get away from the decision-making areas, the entry was up here somewhere. You jumped the gun a little bit on that one. Actually, you jumped the gun a lot on that one. 2 bars early. But with everything screaming, it worked out. Oh, did it? Yeah, that's that fib update. I see it. That'll get you. Then solid. You were looking at this one, weren't you? Perfect. That trade was from this morning, Boaz. It looks exactly like yesterday's. I swear I thought that was the same trade. That's awesome. That's what you want, right? So Wayne, yeah, I see it now. So Rockstar, dude. Easy money. The Chili Dog. Guys, the Chili Dog isn't a Nexgen trade. The Chili Dog was created by a Nexgen user that says when price gets away from the decision-making period and everything on every chart is screaming, find a way to make $110. And Wayne did it beautifully here. And you guys can all thank Ron C. for that trade. He put a lot of time and study into it and was nice enough to share it with everybody. I mean, great job, Wayne. Great job. When the fib printed higher, you stepped it up? Oh, because it came up a tick, so you waited another? Yeah. I don't know. There's something with the math that makes them do that, where they adjust a little bit when they reprint. I don't understand the math that goes into it. John Novak could explain it, but great reaction to it. Great reaction to it. All right. Miss Trina, 1, 2, 3, 4, 5, 6 of them. 1, 2, 3, 4, 5, 6 of them. Trina, I love that you dropped 6 in there. The nice thing, you got a reputation. Sorry, Ron hangs out by the dime store. When you ask him what he's repelling against, he asks what you got. All right, Miss Trina, here we go. Strong top because no triggers are through. She identifies where the market is coming from. Then she says, check it out. Odds favorable, wide like scissors. Clear path, I've got room to my target. Trina, you take the perfect entry. 100 and 200. $300 trade, 100% as we teach it in the room. The best of the best way. Strong top, odds favorable, clear path. Here we go. There's your redemption. I mean, it's beautiful. You get the microphone next week. I'll put you in my spreadsheet as well. Now let's see if you can repeat it. Weak bottom, that's okay. Odds favorable, clear path, room to targets, beautiful entry, 2 ticks above the mid band, stop behind the reversal bar after it was where the market shouldn't go. $100, $200 again, up 600. Do you guys see it? This look is that look. She made money going down. She made money going up. Odds favorable, momentum, clear path. 2 for 2, Miss Trina. Really again? Termination, not a strong top. Odds favorable, clear path, pull back to the mid band. First stop, second stop, money, money. Stop 3 and kiss it. Amen. 3 for 3. So that was 11:16. That was 10:28. All right, Trina, you ready for the question? Is this all the same day? Are you with me? Is this yesterday? Is this replay? Cool. So $300 winner, up 300. $300 winner, up 600. $300 winner, only at 300. So my question is, where did the $600 go? It crashed and erased your P&L? All right. But I noticed these things, guys. And Trina, I'm not accusing you of this. Not after all we've been through. But a lot of times people will only show me winners. They won't show me the losers. They won't open themselves up to the lessons because it's embarrassing. And I don't know why it's embarrassing, but I've done that. So whenever I see that, I always ask. Weak top, odds favorable, clear path, perfect entry, stop makes sense. There you go. Next one. And I know you've shown me losers before, but I like to notice these things. So it's a great trade. It's every rule met. So what was that? So right now you're at 75% winners. Weak bottom, odds favorable. There's your entry. Looks like you got first target and break even. So now you're 4 for 5. I love it. And then odds favorable, clear path. That's kind of a big risk one though, right? But you're in 2 ticks below. You know where your stop goes. You're able to reduce and you're able to make your money. Great recovery. So guys, we just saw what? 6 pictures. 5 of them won. 1 of them lost. 5 for 6. Trina, do you suppose you could do this every day? It's the same thing. I love it. Great job. I mean, really great job. And for those of you who don't know, Trina's new. Trina hasn't been around for the last year and a half. Trina's been with us for a couple weeks, studying one very basic pattern and really kicking ass and taking names. Woo! That's what I'm talking about, Better Dad. All right. I like this. You paused each time to study? I love it. So was that replay? Playback? Oh. So guys, let me go. So she said she paused before she took the trade. And Trina said, let me compare my rules to what I see. So Trina, what you did is you just showed the potential. So you had 9, 12, 13, 2. So that was about a $900 day. That explains why your P&L went away with the crash, because it was replay. But Trina said, let me stop. Let me make sure this is the right trade, because I am proving to myself that this works more than it doesn't. I love that, Trina. All right, here's Wayne's chart read, guys. Weak bottom. Why is that important? Because the decision made down here to push the market up didn't come from anywhere where decisions are made. Goes right to the mid-band, and the large triggers are a full bar away. This is what we call the gap theory. And the gap theory is the same reason we take entries from areas inside of triggers, because price tends to snap back to those triggers. Wayne knows that, and Wayne says, all right, when I hit the mid-band, when these are a full bar away, I'll catch it on the way down. I'll take 1 off at the small chart mid-band, and I'll take 1 off at the triggers. Wayne, this is perfect. He even signed it like Picasso. Nicely done. Not a high probability trend trade. It's actually counter trend, but it's based on a pattern that Wayne has proven wins more than it loses. And the execution is beautiful on that. All right, Bob B. Weak bottom, odds favorable, clear path. Area inside of favorable large triggers. You had it locked in quite a few above the mid-band there. Probably 3 or 4 above the mid-band there. And it worked out beautifully. Great trade, Bob. Momentum and path again for the win. How many times are we going to see that? Is it getting old? I don't think so. Ron, your picture's not letting me open it in the browser, so I'm going to pull it over this way. Odds favorable momentum. Back clears. There's that chili dog again. In before trouble. Out at trouble. Base hit. Base hits save lives. Base hits pay bills. Base hits are enough because base hits add up. Great trade, Ron. Oh, I appreciate that, Wayne. You're not seeing what, Ron? The picture? I just had it up there. Hold on one second. Let me try. So, for whatever reason, my Discord, let me try and click on someone else's single picture. Discord's not letting me open. Oh, you're on a drag then. You're lagging. You are lagging a little bit. Can you see this one? This is Josh's. You are in at 1298, so odds favorable, yes. Clear path, yes. Looked and saw it moving past the blue fib inside of triggers. Perfect trend trade. Entry was late, but made both targets. That's it. You just caught the second part of it. Didn't quite get it at the fib, but with all the advantages and room to the next fib, easy money, Josh. Nicely done. Nicely done. All right, we got two more for Wayne. There it is, Chili Dog. Back of the bar clears. Odds favorable. Momentum on all three charts. It's almost impossible not to make things work when every chart you have is screaming the same direction with strong triggers. Wayne knows that. Found that 120 with 10 tick works best for you on gold. Okay, I had a feeling that 10 ticks was the number. My buddy Marty told me that that's what he had to adjust to. It gives it just enough room on the fluctuations that gold gets. And that's cool though because it's letting you make a little more. I like it. Guys, so this comment right here, I just want to share this because this is what happens when you start trading the software for a while. Is Wayne says, I love this trade, but it's a different market that's not as smooth. And he went back and did all the study with different stop placements and targets until he found the one that was the most consistent and then built his plan off of that. Great trade, Wayne. Missed the chili dog while annotating the last one. Not my money. That happens, but that's the look, isn't it? Screaming on all three. Great stuff. And then Ron, I don't know why. It's not letting me, so I have to pull this over. Hold on. There we go. They changed it. Termination, odds favorable, price clears after pullback, next gen momentum trade. Small triggers break, buys it at the fib, easy money. So guys, that's the next gen momentum trade. And Ron only took 6 hours to figure out stops and targets. I mean, in the grand scheme of things, that's not a lot of time to be able to figure that out. And guys, I'm a little frightened and confused right now because Ron has taken the next gen momentum trade, not necessarily the chili dog. And Ron, the execution is perfect. The next gen momentum trade is next gen teaches it. Termination, small triggers are strong. Over here, the smalls break and snap back, and that's your entry. This is like the appetizer for the chili dog trade. This is the beginning. Before the chili dog trade sets up, it looks just like this. And then if everything continues up, then you get the true chili dog. Great job, Ron. And then I think Cav left. And Cav's not showing me the large chart because he knows I'm going to give him crap trading directly into a termination condition. He did it. It worked. I mean, it's Cav's trade. But Cav's like, if I show him the large chart termination condition, he's going to call me out on it. And then there it is again, directly into a termination condition, and it works again. Cav, if you watch the video, you're flirting with it. And then Josh, odds favorable, clear path, entered on the way up because it didn't, I'm not sure why. You let it pull back and then get in on the way up. First target, second target. Nicely done. Hit your targets. Great job, Josh. Momentum and path, man. Momentum and path. Have I mentioned that? That once you guys can identify these two, you're going to find a way? I firmly believe that. Once you can identify those two, you're going to find your way. All right, Better Dad. Better Dad's like, I'm going to keep them busy. I'm going to go one better than Trina and drop 7 in here. 1, 2, 3, 4, 5, 6. Here we go. My tired eyes. All right, so he's saying, where am I coming from? It's a weak bottom. It's just bouncing from the middle of nowhere. Odds favorable starts here as the triggers begin to open up. Exactly. Clear path. Look at this room. Triggers above and nothing to the next fib. Absolutely no fibs, 1-to-1s, or mid-bands in the window. Don't take it. Don't give in to the FOMO. Just follow the rules. I love it. Rules adherence. Guys, as a brand new user, this is awesome. And then, Better Dad, you're going to be able to say to yourself one day, maybe I'll get it on a reversal bar, but until you're comfortable, guys, this is no trade. No areas inside of triggers. That's okay. Great chart read. Weak bottom because the triggers came through divergence. Odds favorable because the smalls are above the large. Nothing burger, no clear path. Right? Triggers are still below. No options in entry window. High risk. The clear path presents itself here. Large triggers are through. And that's where it pulls back to support. Perfect. 8 ticks on the first one, make $100, and then they get you break even. And you still could have re-entered. I absolutely agree. Profit target 2. 16. Profit target 1. Absolutely. So Better Dad, what you just realized is that when the large chart says go, Ron, I'm sorry, I just saw that. You don't have to post your links instead. Let me show you. Discord changed. I used to have to click down here to open your pictures. Now it's putting it up here. So they just changed up on me, and I didn't see it. Thank you though. Great trade. And Better Dad, I like the recognition because what happened is you said this is a high probability trend trade. I'm going to follow the KISS plan. And you looked over here and you said, wait a minute, this is still a high probability trend trade. I could get back in. I love that. Great recognition. All you did was gauge whether or not the rules were met, and they were. Awesome, awesome chart read. Odds favorable, clear path. I love this. Termination with only one trigger through. Better Dad, are you with me? Are you in here? Cool. Trigger lines are like a car. When it's going down, this is the front of your car. This is the back of your car. This is the brick wall you're trying to get your car through. If the back of your car never passes through, we're going to say that the triggers didn't break. Does that make sense? So actually, this is an awesome strong top or strong bottom because the triggers didn't get through. So let's go back. Strong bottom. Yep. Everything says up. Potential to break. No clear path due to the divergence, but it has the potential to break. You say, I'll just wait, and let's see what that circle looks like. Pull back to support inside of triggers. Easy money. Easy money. Great trade, Better Dad. And I like this because you said, you know what? I'm not going to take the potential one. I'm going to wait for it to clear. And patience was rewarded. 90% of your day is doing nothing. You know that the next one's coming, and it did. And it created a very easy winner all the way up to Fibonacci resistance. Better Dad, you're killing it. And then let's see what we have. Weak bottom, odds favorable, clear path. Pulls back to the area right inside of triggers. I love it. Let's see. Profit target 1 at 11 ticks. Now you're break even. Profit target 2, 287.50. Or at the fib. In truth, I probably would have closed at the divergence base. Hits. Build confidence. I love it. So the KISS plan, Better Dad, is nice as you're getting going. Because instead of going, oh, I think I should, I think I might, I think I would, do that 100, 200, and then keep taking great notes, right? So as you're building confidence, $300 is a huge confidence builder. But every picture that you have, take the 2, right? If you want, if you choose to. And then you say clever things like, with odds favorable momentum and a clear path, this is what it looks like when I'll hold my second contract to the fibs. So as you develop your own management plan, it's okay. Focus on getting paid, all that good stuff. Collect it. But let these pictures not only be validation that you're doing everything right, but let it also start to grow that plan, that management plan. Because that is the perfect look for bigger profits. You don't have to catch all the money in the beginning, but you're learning how to because you're learning how to trust that plan. Great stuff. You've been making your plan? Awesome. And guys, one thing I tell everybody, email it to me. If you want me to put eyes on your plan and talk about it, email it to me. I'll always help. All right, weak top, strong triggers, clear path to the next fib, maybe an entry here, but right at the window, so made you nervous, really not part of the rules. Well, it is an area inside of triggers, Better Dad. It's a lot of risk. And then it gives you another one, and then it gives you another one. And man, this is just the market going, Better Dad, get in. Seriously. Come on. So any of those 3 could have been outstanding. Any of those 3 did qualify. All of them had kind of big risk because of the split triggers. But if you entered after a confirmation bar, establish your risk, you could have done any of them. And then once it gets there, move on. I love it. Man. Uh-oh, wonky triggers. See those triggers? That's where you have to reload. That's where you got to reload that historical data and get them right. Whoops. All right. Weak bottom because the triggers are through. Odds favorable with the smalls above. There you go. Clear path for the KISS plan once the triggers get above support. I like it. And that was it. That was your pullback to support right on top of the triggers. That was this one right here. And this is one of the ones where you have to make decisions. So let's see what happens. Price retrace in the midband. Your limit order was tagged. Quicker while you were positioning, but it should have gone 2 ticks above, not below. No worries. It was quick. And then you're behind the reversal bar, and it makes it pretty easy to catch the money. Closed before you ever got there. $300 in 4 seconds. That's a hell of a way to make a living. So Better Dad, I'm not sure I could have done much to make those any better. Great adherence to rules. Awesome on the entry, defining it, knowing exactly where your stop goes. And then getting paid. Great job. Great job. That's okay. I like the losses. I think there's a lot to learn there. Are you taking the right losses? All right. Strong momentum. Potential to break, Boaz. Remember, if we're using triggers, not bars, this only has the potential to break. Your entry is perfect. Entry is perfect. Stop, maybe a little bigger than it needed to be, but I mean, that's the perfect trade. It just didn't work. One of the things, Boaz, is when you talk about 50-50 trades. In the KISS plan, it was very fast. In the KISS plan, it talks about coming from a strong bottom. It talks about letting it be a termination that reverses the market. It increases the likelihood of success on these. But you had such a good look. You had such a great entry. Risk, I think, probably could have been maybe a point better. That's the only thing I could say. And you might have just gotten slipped if it was so fast. Or wait for confirmation, right? Since it's not from a strong bottom, I'll wait for an up bar. And if you don't get it, you never take the trade. That's kind of that little growth piece where you're trying to refine just a little bit. Nicely done, though. Ron says third base. Momentum and path. Really? Momentum and path. Get in, get out. Scissors open, base hit. So what is that? That's 3 times 110 each, give or take. 330 on a single contract. Does that say Ronald A. Cool Guy? I just assume that's where that's going. Great trade, Ron. Consistency pays bills. Base hits pay bills. Oh, we saw that one. Did I skip one? Or did you double? Nope, I did. I skipped Ron's and then went to Boaz. There we go. All right, better dad. Wonky triggers. We got to fix those, guys. If you ever see crazy triggers, you're not seeing it, Ron? Can you see that one? Okay, cool. So guys, if you ever see your triggers like off in the distance, something's wrong with your data. Always right click on your chart and reload historical data because it's difficult. Right on. It's difficult to take the right trade when it looks like this. So weak bottom, odds favorable, its potential to break. You even said that it wasn't a clear path. And then you're in just above support inside and your stop's in the right spot. It just didn't work, right? Better dad? That's the same one that Boaz took, 100%. It just didn't work. And when we talk about the KISS plan, coming from a strong top or bottom, and let me show you why. Because when it's a weak bottom, it's more likely to continue down. When it's a weak bottom, it's more likely to continue down. When it's a weak top, it's more likely to create that big bounce. When it's a weak bottom, it's more likely to continue down. Weak bottom, more likely to continue down. I'm telling you guys, they know where these fibs are. They know where these are. And very often from weak bottoms, you get continuation down to that next area. That's one of those patterns that happens all the time. So as you begin to venture out and you start looking for those 50-50 trades, remember that a strong top or bottom is rule number 1 in the KISS plan for a reason. Because it increases the likelihood of success on those trades. Gary, haven't seen you post in a while. What is this? That would be reload your market data. Did you just post this in here so I could see it? Right click, reload historical data. It's a tick thing, Gary. It typically happens on Mondays. It's just a data thing. So right click, reload. Almost always fixes it. You used to come in the room and tell people how to fix this. I don't know how to keep it from happening. I only know how to fix it when it happens. Happens 5 or 6 times a day? Yeah, I've never seen it. I get it Monday morning. That's it, Gary. What did Jason say when you brought it to him? Did he have a fix? Okay. How can you take pressure off the system? Oh, awesome. Have a good one. More jocularity tomorrow. I like it. Take care, Ron. Always great having you in here. How do you take pressure off the system? We're going to come back to this one. How many charts are you running? Whoop, that's not yours. So when we talk about taking pressure off the system, how many charts are you running? How many indicators are you running? How much are you drawing on the charts? How's your computer? Are you still running eight screens? I mean, less things reduces pressure. But I don't know why your stuff would do that. Have you rebuilt your charts? So 5 screens. Okay. So that is huge taxing. Is this something that just started, Gary? I'm not a tech guy. You guys know that, right? Is it a micro NASDAQ thing? I'm not sure. 5 screens. Yeah, Gary, Jason's going to be better than I am at this. As much as I hate to admit it, I've got like the very basics. And then once I fall outside of my very basics, John Novak or Jason fix my charts. Just not very techy. Sorry, man. I know that's not as helpful as you need it to be, but Jason is always... I'll never have an answer that Jason doesn't. Yeah, 5 screens is huge on the video card. Huge on the video card. I run 3 screens, but my computer could launch spaceships. My computer's crazy fast, and my internet's like crazy fast. Josh, everything says down. It has the potential to break. High probability. Potential to break though, Josh. Not a clear path. Do you see it? Large hadn't gotten through yet. But it is screaming down. Pull back to resistance inside of triggers. Stop where the market shouldn't go. Easy money. Easy money. Josh, great job. You're going to have to retire early from the Army. See, Gary, I don't even know what that means. I wish I did. I don't know what a core does or an i9 processor. It sounds fast. I'm so computer illiterate. My brother thinks it's funny. All right. That is fast. I don't know. Maybe it's your workspace. Have you tried just rebuilding the workspace? When I have recurring problems, I rebuild everything from the ground up. Because I just assume there's something corrupt in there. Oh, you know what? Josh, how did I miss that? I love this. Follow rules, make money. Is it really that easy, Josh? You know what's fun is if you ask the room, guys, there's 23 of us in the room. Show of hands. Who makes more money? Who makes money more often than they don't if they just follow the plan? Right? So, and watch this. Who loses money more than they make money when they try to be smarter than the plan? I'm telling you guys, Josh. Almost always, right, Spice? All right, one more question. Who knows that and breaks their damn rules anyway? So here's the great thing, is you're not alone. You're not alone. Guys, we're all human. The biggest fight you will ever have is sitting on your hands and doing nothing. That will always be the most difficult part of trading. The software is amazing. The rules are outstanding. Our ability to follow rules is where human nature comes in. Our fear of missing out. Men have a hard time following directions. Amen, Spice. We've all put together a grill and had extra parts, right? But we sure threw away that piece of paper that told us where those extra parts go. So I think it's pretty cool. There you go, Bob. I think it's pretty cool, guys, that we can be in a room up 3,000 net since Sunday night. Guys, it's Tuesday morning. We're in a room full of brilliant minds, and we're in a room full of rule followers, and we're in a room full of rule breakers, guys. And what we're doing is we're trying to get outside of the rule breaker. One of the easiest ways to stop breaking your rules is to accept that you're going to break your rules every now and then. And instead of beating yourself up, just go, whoa, I messed that one up. Let me refocus. Let me get back into it. The rules work. I love that all of you participated in that one. Even you folks that haven't said anything all day. When you follow the rules, great things happen. When you break the rules, that's when challenges come in. So, awesome. You guys are amazing. Trina told you to just follow your rules. Trina, you're one of my favorites now. I'm not supposed to have favorites, but if you can keep Wayne in line, he got in trouble. I love it. I love it. There's crude oil bouncing around, huh? It's funny because we're all human, and I love it. And I love that about what we do. And I love that everybody admits it. You know, there's two types of people in the world that day trade. There's the people that admit to taking losers and making mistakes. And then there's the liars. So, got a bunch of honest people in this room. So guys, that's all the pictures. Right now I've got not the best triggers. I've already got 2 divergences, but it's bouncing off of resistance inside of triggers. So that's a look. I had weak triggers from nowhere. We just hit the mid band, and the large triggers are a full bar away, and it's most likely to close the gap to those triggers than it is to go down. Sorry, Better Dad. Will you fix your triggers, Better Dad? Ooh, I like this one. I like this one. Are you ready? They're still wonky. Weak bottom. It is odds favorable. You thought this is clear looking for a tail, but missed the bar, kissed the fib. Should have been no trade. Oh, after this one. And then there's a pattern here. Do you see how the large triggers are a full bar away, Better Dad? See how far they are? This is what we call the gap theory. And I'll make a picture for you guys, and we'll put this one into the spreadsheet as well. So the gap theory says, and let me type it out. When price accelerates away from the large triggers and hits an area, and it can be any, it can be fibs, mid-band, 1-to-1, and this defines the mid-band as a termination condition as well. It is more likely to suck back to the large like a vacuum than it is to go up. And this is the gap theory. And what it says pretty much is Any long trades taken before price corrects is more likely to get run over than win. And this is textbook for it. This is 100% beautiful price sucking back to those triggers. So I'm going to go put this, I'm going to put it in the basic rules under termination conditions. And we're going to call it mid-band as a termination condition. Because this pattern repeats itself a lot. And Trina, no, that's good. That's identifying termination conditions, better dad. That's a good thing. So Trina, yes. What's going to happen is, oops, I'm going to see if we have a live example happening right now. Probably not, but who knows? I thought we just had it somewhere. It was right here. So the idea, Trina, is that, all right, let me find, rather than making you guys use your imagination. There it is. Well, nope, that's a bad example. Hold on. I'm going to find a good example, Trina. I'm going to find one of my examples. Price reaches the mid-band. If the large triggers, and you're absolutely right, I'm just looking for the visual. If the large triggers are below the reversal bar marker, the gap theory is in play. And if the large triggers are above the reversal bar marker, the gap theory is in play. And that's exactly what it looks like. So you can use that reversal bar marker to gauge if they're actually a full bar away. And then that is what it typically looks like after the fact. Well, if they're straddling, they're not a full bar away, Miss Trina. Right? If I'm sitting on top of a wall and my left leg is on one side and my other leg is on the other side, well, then half of me is a full bar away and the other half of me is not. Which means that if price comes up, and let me show you. And I think this picture was it. I'm going to find it. Well, nope, that's below. So what happens, and the reason that they can't straddle, Trina, is because this line shows where this bar becomes a reversal bar. So in order for them to be a full bar away, it means that a full bar prints, and then there's still a little daylight to get to them. Does that make sense? So if they're straddling, they can still return. But if they return, it's going to be your synthetics over here, and if you've got an area inside, it's just price pulling back to the large triggers like it typically does. But this is how we define the mid-band as a termination condition, because usually it doesn't phase us if the large triggers are way up here, but when they're lagging behind, that's when it's more likely to bounce off that mid-band. That's a good question. And I like how you're looking for exceptions. It means that you're thinking. High probability trend trade. Josh says, odds favorable? Yes. Clear path? Yes. No emotions, follow rules, trust your stops and targets, say it out loud while trading so your dog stares at you. Amen. Pull back to resistance inside of triggers, easy money. Josh, you found the key, man. You did it. I love that. It was stuck in the couch cushions. Yeah. Floating off in the cloud. Awesome. So guys, I'm going to take a break. Look where the large triggers are, all the way up at that reversal bar marker. I'm going to take a break. When I come back, the class is y'all. So you tell me what we're going to do. Josh, freaking amazing trading today. Awesome. Awesome job today. I will be back in 5, maybe 4, could be 3. Who knows? When I come back, we're going to look at whatever you guys post. We're going to talk about whatever you want to talk about. But I'm out of pictures, guys. So chart read takes 2 seconds. No clear path, no trade. Oh my gosh, that was easy. Hold on. Weekend triggers. Woo, it's dancing, right? Higher divergence. I don't have odds favorable. I do have a clear path. Look at this. That's not pretty, is it? Those aren't favorable large triggers. They're different colors. I don't know if it's going to go up or down. Anything can happen. It's not just a clever phrase. Guys, I'll be back in a few. I'll leave you with crude and we'll see what it does. is in the same price range may terminate the trend. Holy smokes. Couple it with weak triggers, even more holy smokes. All right, Miss Trina, dazzle me. Here we go. I love that you guys are putting your names on it now. So, weak bottom, odds favorable, clear path, perfect entry. Beautiful entry. Stop 1, 5 ticks beyond the large triggers. Stop 2 should have been here, but flew to first target, so went straight to even money. What a wonderful problem to have, Trina. Have you guys noticed that when you take the right trades, they tend to go fast? I've noticed that too. So I love it. Great trade. Everything's beautiful. Perfect entry. Profits made. Break even. Did it give you a second chance, Trina? Did it pull back to those areas inside, give you another opportunity to go long? Usually for me, and let me share this. This is kind of something that I don't talk about all the time. No worries. I'm going to show you guys something. So one of the things that I did in my life is I made little snippet whatevers, like tiny little 2-page blogs. And this one is using second divergence for manning your trade. So when you start to break outside of that high probability trend trade or that KISS plan, this is one of the ones. And Trina, this is exactly what you had. You had the perfect long trade, and you get in and you make money in that divergence prints. And for a lot of people, a second lower divergence is an exit condition anyway, even if you don't want to wait for it to get to break even. But as long as the large chart still says go, this confirmation bar, this reversal bar can become an entry to grab the second half. So you let the small chart tell you, whoa, maybe it's not perfect. But if the large chart is amazing, maybe you take a second shot at it with a little confirmation. So that's kind of getting into a little more advanced management, but this one kind of lends itself to the lesson. But here's the thing, Trina. Take 4 trades that go to $100 and break even, call it a day, make 6 figures, go play on track. Make Wayne build you a hot rod. That's what I say. Or even better, make Wayne build me a hot rod. Great trading though. Or hammock, that would be nice too. Weak top, since everything is through. Yes. Clear path, but wasn't paying attention. Odds favorable, open scissors, now a clear path again. There's a quick little pullback right to resistance inside. Man, that had to be fast. Stop loss here. Mid-band just happened to be close. And easy money. Great job. Great job, Better Dad. You're so wonky, though. This just doesn't look right. So you might want to, because I want you guys to have the best information. I want to make sure that you guys have the best of the best and your stuff is going, that you're wonky. Better Dad, take a minute, go to Jason. Just let him make sure that everything's solid, I think. Because your last 3 or 4 charts don't look right. If those small triggers never make it back inside, and look how they're doing it here as well. Anytime mine look like that, and mine look like that too, I'll right click and I'll reload all historical data and I'll force it to just recalculate everything. You need a new PC? There is, hold on. There is a company that gives discounts to Nexgen people. Let me go to resources real quick. I think it's Easy Trade, but they give a discount, and there's a lot of people in here that are using them. Easy Trading Computers. And the word on the street, oops, that's not what you want. The word on the street is that these guys create unbelievable trading computers. There we go. Let me get that link for you. I'm very fortunate. I got John Novak when he was bored one day, and he sent me all the pieces to one and said, here, put it together. And mine's crazy fast. But these guys, they do desktops, they do laptops. And I think if you tell them that you're with Nexgen, they put a lot of bells and whistles on it for you. But there's that link. Spice, you said especially strong when large chart is above the midband. I'm not sure what that's in reference to. I may have missed it. Are you talking about this one? You're welcome, Better Dad. And Jim Forbes set you up with a Dell? Very nice. Oh, it was on Trina's recent chart. Oh, that was it, yeah. So when you're above the midband, you like longs a little better? I gotcha. I agree. You're already trending up and everything's going up and you're on the good side, everything's green. Always a nice thing. 3 divergences in the same area and the market went down, Joel. You know what? I don't have a lot of those pictures in the termination conditions. I'm going to do it. Let's take that picture, get it in there. Little study tool for everybody. Thank you for that one, Joel. Good picture. And guys, I've got the supercomputer because I need it. But I've also got a laptop. I went in and got just a gaming laptop for when I was traveling. And I taught class and ran software and did everything with that gaming laptop. And it was fine, and I think it was only like $1,400, $1,500. It's just like anything, though. I've gotten to a point in my life where I believe you get what you pay for, and the more you spend, the more customizable. It's like buying an old Harley. You can rebuild the engine 100 times instead of just running through tolerances quick. So. Look at that. 3 divergences, weak triggers. No reason to go short. Weak top turns into a strong top, but I still don't have a clear path. Nineveh Legion, good line of laptops. Right on, Marlon. I'm telling you guys, I'm not your tech guy, but there's a lot of people that have done all of the work for you already. And Better Dad, if you went over here to the traders chat and said, hey guys, what's a good computer upgrade? New guys are curious. We'll see if they answer. Because let's be honest, men love to show you their toys. We love to, I got a new car, come see it. I got a new boat, come see it. I got a new house, come see it. So we'll see if they respond, Better Dad. Termination for the win. Potential, potential, no potential, no potential, no potential yet. What do you guys want to talk about? How we doing? Did all of you reach out to John Novak about beta testing? You guys that wanted a beta test with TradingView? We went through yesterday. He gave me a set of instructions. It took me 3 minutes to set up. It's getting pretty easy. Kind of fun. Look at that termination condition. I mean, come on. Yes, but you haven't heard back? Doing a lot of programming stuff right now. So we're testing over here on TradingView. Use an AMP. It's pretty cool though because we've got it set up with multiple accounts. Man, Better Dad, we are thrilled to have you here. And it's cool because we have a trade copier. So I want you to see this. I took a trade first. So my P&L in this account is a little over $2,000. And I used a trade copier to take the exact same trade in 2 other accounts. So I turned a $1,600 trade into 3 $1,600 trades. That's one of the things you can do when you start getting consistent. Is you can take the same trades. You can work the exact same management, but because of trade copiers, you can turn a $100 trade into a $1,000 trade just by using the copier. And of course, you can turn a $100 loss into a $1,000 loss, but it spreads it out over different accounts if you're using those funding firms. Kind of fun. Fun stuff. So Better Dad, you just... Jen, I want to say it's 5 initially. Hold on. So I think you can have the max is 5 accounts initially, and then you can get there. Oh, nice. Mike, we do love to talk about our bikes, don't we? So when I was I turned 25, met my wife, decided that I had to live forever. I went to a trade school out in Phoenix, got a couple certifications on Hondas and went through the Harley class, stuff like that. I love motorcycles. I grew up on motorcycles. I don't ride them anymore though. I don't trust cars. But I've thought about getting another track bike, getting back out on the racetrack with it. I want to take a picture real quick. I want you guys to see this. This is pretty cool. No. Do you guys see how your software, rule number 2, has clearly defined the range that you need to break out of to feel like you have an advantage? That's one of the advantages of the software, guys. But what happens, and let me know if you guys have ever done this. I take this one and it doesn't work, right? And I'm upset. And I skip this one because it's not perfect. And I'm getting bored. And then I'm mad because I can't go up here because of that termination. And now I'm a little despondent because I can't go short either. And then I just say, you know what? F it. I'm going long. Maybe it'll break because this support has to hold. And then I take another loser. And I'm like, oh yeah, well, I'm going to go long here. And I'm going to go long here. And then you get run over a few times. You're like, well, I guess I have to go short. And then you get run over. But it has to go down. You have to get over. Guys, people do this. Opinions are so easy to form. When that path of least resistance just says, until it breaks out of this range, I choose to do nothing. Guys, it's coming. The next trade is always coming. And Jen, that is a definite no-no. The next trade is always coming. But right now, there's a fight. There is a huge fight. Pretty cool, right? It's like having a buddy in the pits. You know, I'm going to share an analogy or a story. Computer wonky, restarting back in 5 to 10. Right on. My brilliant wife in the medical industry and was a trauma and cardiothoracic surgeon nurse for 20 years. And when I taught her to read the software, when I taught her the trades, it was an interesting approach that she took to it because she would say, well, in my career, if I break rules, people die. And she brought that to her trading, and I think she's going to be an amazing trader. And I think that it's easy on Simulator to not feel the consequences, to not feel like it's detrimental to lose or to take the wrong trades. And once you realize that your entries, that your exits, is your rules, that's your lifeline, that's your safety net, it becomes easier to follow them, I think. Guys, that is the potential to break, and you've already got 2 divergences on it. Let's see what it does. Did the sellers win? Or did the buyers make them think they won? Looks like the sellers won. Good stuff. What do you guys want to talk about? We've got time. Nexgen Mark is in here. And guys, Nexgen Mark is not me. Nexgen Mark is much cooler than me. I don't know if he's listening in. 3 divergences. Only the potential to break. And look at that. There's 4 divergences. Up it goes. Rules for the win, ladies and gentlemen. Rules for the win. That's awesome. I love it. I still get excited watching the software. And once you believe the next trade is coming, you stop trying to be in every move. What do you want to talk about, guys? Awkward silence.